Now I will call upon our most dashing Wealthconian, very tall and Araglan coach Miru. So he's our Dr. Sumit, who is an orthopedician and a very fond financial investor. What is Dr. Sumit?
Good afternoon, everyone. Myself, Dr. Sumit. So today we are going to talk about the assets and liabilities. What is assets? So in simple language, asset is anything which pays you. Assets are anything which pays you. And the liability which takes money from your pocket. So in previous image, you can see there is a hen who can give eggs and also the meat. That is assets. While in the second slide, you can see the dog. Dog is like a liability where you have to nourish it, feed it. So you can consider it in simple language, it is a liability. So we should be able to differentiate between the true assets and the pseudo assets. So what are the true assets? The true assets are easy to sell, no emotional attachment. So examples are cash, FD, policy, mutual funds, plots, commercial building, and the gold coins. While the pseudo assets are, it is very difficult to sell, and also there is emotional attachment with those assets like house, car, furniture, gadgets, and also the jewelries. So in ITR form, there are different headings for the income like salary, house income, business income, capital gains, and other income. Today we are going to talk about the capital gain. So what is the capital gain? Any profit or the gain you got it from the sale of a capital assets is considered as a capital gain. So what are the capital assets? Physical assets are real estate, gold, machine, and animal. While the financial assets are debt products and the equity products. Equity products are like shares and the equity mutual funds, while the debt products are the FD, recurrent deposit, and PPF. So type of capital gain. The capital profit earned from the sale of a short duration of assets, while the long-term capital gains are the capital gains earned from the sale of a long-term investment assets. So how we are going to decide it is the short-term or the long-term? So time duration to consider as the long-term or the short-term are the different for the different assets. So for the equity products, the time horizon is 1 year. While for the real estate, the time horizon is a 2 year to consider as a long term or short term. And for the debt products, it is a 3 year. Equity products which are sold after the 1 year, the tax reduction will be the 10%, while for the short term capital gain, which are sold before 1 year are 15%. While the real estate, the time horizon is a 2 year. The long term capital gain earned by selling real estate, the tax deduction will be 20% after indexation, and for the short term capital gain, it will be as per the tax slab. While for the debt products, the time horizon is 3 years. The long term capital gain after selling debt products after 3 years, it will be deducted at 20% through the tax, and for the short term, it will be as per the tax slab. The capital gain exemptions, the capital gain earned through the agriculture land, sovereign gold bond, gift, and inherited property are exempted. So we'll talk next about the section 80C. It allows to reduce the taxable income by making tax-saving investment. It can be availed by the individual or the HUF. It includes many things like PPF, EPF, LIC premium, ELSS, principal amount on the home loan, and Sukanya Samruddhi Yojana, National Savings Certificate, Senior Citizen, ULIP scheme, and the FD for the 5 years, etc. But the Wealthcon recommends only 3 investment products under 80C. Young people must use 80C for the investment and the wealth creation. ELSS, PPF, and the NPS are the recommended products through the Wealthcon. So we'll talk about the taxation. As Benjamin Franklin told, the and the taxes are certain. So whatever you have earned, either you can invest it or you can spend it. So if you invest it, you have to pay an income tax, and if you are spending, then you have to pay a GST. Tax can be a direct tax or indirect tax. Direct tax is income. Direct tax will be collected through the income tax, security transaction tax, or the corporate tax, while the indirect tax are through the GST, excise tax, and the custom tax. In Wealthcon, cash generation by avoiding tax is prohibited. Now let's talk about the tax regimen. The slab system means different tax rates are prescribed for the different ranges of income. The few terms which you should know are the financial year and the academic year. The financial year is a year in which you earn a money, while the academic year in which you evaluate the previous year's income and pay the taxes on it. So there are two regimes: new tax regimen, in which there is no permissible exemptions and deductions. The income tax slabs are 0 to 2.5, 2.5 to 5, 5 to 7.5, 7.5 to 10, 10 to 12.5, and accordingly. And the tax are deducted as per shown in the image. While the difference between the new and old tax regimen is, in old tax regimens, you can avail rebates and exemptions while filing a ITR, in which up to 2.5 income, you need not to pay anything, no tax you need to pay, while the income 2.5 to 5 lakhs, the deduction is 5%, 5 to 10 lakhs is 20%, and above 10 lakhs is a 30%. Best of luck for your journey. Thank you.